All right, investors always jump ahead. US markets are soaring on this news from Pfizer. Today's performance adds to the 7% plus gains that we've seen since the presidential election result last week. This is the first trading day, as I mentioned, since Joe Biden was projected to be the winner. And so far, so good. The Dow and the S&P 500 both traded at all-time highs. The tech-heavy NASDAQ, the big outperformer, of course, up to this point, underperforming today, relatively flat on the day. Let me give you a look at some of the biggest gainers driving the Dow. Amex up over 20% today. Boeing jumping by 16%. All the airliners benefiting today. A few more in the double digits, including Chevron, JP Morgan Chase, and Disney, of course. All those leveraged to an improved growth outlook and getting back to some sense of normality, gaining today. Even before Pfizer's announcement, Goldman Sachs, though, growing more confident in a V-shaped recovery. Over the weekend, they projected US growth will return to pre-pandemic levels by the middle of next year. Their reasoning is based on two assumptions. They expect a Biden administration to reach a stimulus deal and that a vaccine will be approved to help contain the virus. Ooh, there's a lot of assumptions in there. Joining us now, Quincy Krosby, Chief Market Strategist at Prudential. Great to have you with us. Just give me your sense of what we're seeing today in terms of optimism. Are we being too optimistic about the timing, perhaps, here, if anything?
Well, you can say that, but, you know, all of the projections suggest that we could, by the third quarter, maybe even going deeper into next year, the fourth quarter, have as much of the global population vaccinated and begin to have a normal recovery, not just a recovery based on fiscal stimulus and monetary stimulus, which global central banks are providing. The one thing about the vaccine is it is in and of itself a major stimulus for economic growth, pre-pandemic economic growth. But again, it's not going to be quick. We're going to go through a difficult winter with COVID, and that's global issues with COVID. But nonetheless, we're on track to begin the process. And the first part of the process is emergency authorization, and then the distribution in the US. And you pointed out, not every American is going to take the vaccine. That is going to provide a stumbling block in the country. But nonetheless, this is probably, I would have to say, even more important than even the election, because this is what we have been needing, and it's necessary. And also, as pointed out, they are not the only providers of a vaccine. There are others that are in phase 3 trial. There is one in the UK, AstraZeneca, already starting the jabs. So we are going to have enough companies, entities, and by the way, altogether, there are about 120 working towards a vaccine development. There will be mutations. There will be other issues with it, but it looks as if we are on the trajectory toward the other side of the pandemic. As long as it takes, the market, as you again pointed out, looks ahead 3 months, maybe even 4 months. And that's why today you see the normal stocks, the sectors getting a major boost. You're seeing Disney, the consummate discretionary, consumer discretionary name, getting a boost. And of course, it will pull back. There's no doubt about it. We'll see consolidation. You see the tech, you rightly pointed out, is flat. Any profit taking there is most likely being used to fund going into the laggards, the ones that were pummeled by COVID. That's typically what happens. And one other thing, coming into this market today, before the Pfizer announcement, we saw the technology stocks moving towards overbought, meaning they were ripe for any kind of pullback, any sort of consolidation.
Yeah, we have to make this point. I think everything that's gaining today has been so beaten up, like the airlines, Macy's, Delta Airlines, and yet on the downside, the ones that are losing, the Zooms, the Netflix, oh boy, have they had an astonishingly great year, and these losses are really minimal relative to some of the gains that we've had. We've got them on the screen now so people can see. I want to talk to you about the election as well, because I do think investors had convinced themselves, whatever the result of this election, it was going to be great, because we're going to look at the optimistic side. If we are looking at split Congress here, so the House holding, the Democrats holding the House and the Republicans holding the Senate, doesn't that not mean that all the challenges that we've had in agreeing financial aid continue? What are your views on that?
Well, there is a tug of war. I mean, the Republicans do not want to offer a $3 trillion stimulus. That was the initial package offered by the Democrats. So it'll probably be a bit skinnier, especially because the virus will ultimately be contained by a vaccine, and therefore economic activity will get a boost. Again, not immediately, but certainly within the second and third quarter of next year. But that said, the other side of it is that with the split Congress, you don't have the fear in the market of higher capital gains taxes, of corporate taxes rising, the wealthy. The fear was that the wealthy, who would have to pay higher transaction taxes for their sales of their stocks, would start selling in force before the year was out. That has been removed from the table. However, there's always a however when we're talking about this. You do have runoffs in January 5th, in the Senate in Georgia. That could change. It's a distinct, what shall I say, possibility, a very distinct possibility of concern in the market. Both sides are pouring a lot of manpower and spending in ads. The Democrats want to see the 2 Senate seats up for reelection, in the runoff, rather, won by Democrats, and similarly the Republicans. Even one vote for the Democrats will change the equation, but not heavily. And by the way, again, because it's an off election, you're not having everyone running to the polls as they did in droves for the general election. Chances are, statistically, that the Republicans will maintain control over the Senate. But there's always that possibility of one of the seats going to a Democrat. The market is paying close attention to that. But now I think the market is rejoicing in the possibility that next year, even third, fourth quarter of next year, life looks more normal. And again, back to a pre-pandemic, not 100%, but as much as possible. You named all of the stocks. It's interesting. I look at Clorox. Clorox is one of the most formidable beneficiaries of COVID, right? It's down today. I sometimes think I know when all of this is going to end if I could find those Clorox wipes on the supermarket shelves. Then I will know it's all over. So we're not there yet. And again, we have a hurdle to go through. But I would have to say that this is what we have been waiting for. And by the way, you heard just before we got to this subject, Moderna is probably going to come through with their phase 3 trials, again, positive. But it is the 90% efficacy that was important for the market. And the Federal Drug Administration was actually, their baseline was 50 to 60% efficacy. This is even better than that, of course. And we expect to see more, again, coming out of Moderna, Johnson & Johnson, AstraZeneca. It is the beginning of the end of COVID-19. And it takes us to a place that the economy, believe it or not, even with the threat of COVID-19 now, has been inching towards. The economic data in the U.S. have been surprising to the upside. And knowing that we're getting closer and closer to the jab here in the U.S., it looks as if the market finds this even more important than the election.
Yeah, I hope you're right. The beginning of the end of COVID, quite frankly, but there is a long time between then and now. We're still going to be buying a lot of Clorox and washing our hands. So the markets are not the real world and the real economy. I guess we have to remember that too. Quincy Krosby, great to chat to you, Chief Market Strategist at Prudential there. Thank you.